Okay, welcome everyone to IE 206 Engineering Economy, and today's chapter is the chapter 13, the break-even analysis. The break-even analysis is one of the most important chapters in this course. Usually we see it twice in exams, in final and in exam 2. The topic itself also it is important in your capstone design project. If you are planning to conduct your capstone design on innovative design or a product, one of the factors that you have to consider in terms of the mass production is the break-even analysis. The break-even analysis, it is a common concept to be used when two relations they need to be equal to each other, or if the difference between them equal to 0. Example for a break-even point is a cost and revenue. As an investor or as a businessman or as someone who's starting up his business, you need to know when is the, or to be precise, what is the number of production that I need to maintain so my cost will be equal to my revenue. So at the end of the day or at the end of the year, I will not have a loss on my business. Okay. Other example, can you bring me where break even can be applied? Anyone? Is the voice clear? Just to make sure that. Okay. So other examples, think about any two relations. Even in the service, it doesn't have to be a product, it could be a service. The service cost and the service revenue, it is based on the number of transactions or the number of services you provide. So this is also applied in products and services applications. The idea of the break-even, it is based on the two relations that need to be equal to other, and we have said that the cost and revenue, it's a good example when you want to know what is the number of quantity or the number of transaction that you need to maintain in terms of your cost will be equal to your revenue, or if you are planning to or you want to have a profit at the end of the year, then you can determine the exact number of quantity you need to produce or number of services you need to perform. Okay, so it is popular application, and as I said, it is very common to be used in the capstone design projects. And the two relations that we are going to use in the study of the break even here, it will be based definitely on the revenue and the cost. When we find the quantity of the break even, we can know how we minimize the cost and how we maximize the profit. Because if you know the production level that you need to maintain so your cost equal to your revenue, easily then you can decide or determine or find what is the number of production that you need to target so you can have revenue or profit at the end of the year. Or also the number of products that if you maintain it at the end of the year you will have loss. So the break-even point is the equilibrium point, and from there you can decide how many should I produce to make profit, or how many should I avoid to produce so I don't have loss. The relation, it could be a linear and non-linear for increasement of the revenue versus the cost. What it matters to us really here in terms of the break-even point is starting from here. The break-even, it could be found without finding the time value of money, as also it can be found with the time value of money, depend on the case and depend on the given information. But first we need to know what are the type of cost that we are going to use to find the right side of the equation of the break even, if we recall this, which is the cost and the revenue. We need to know what is the different type of cost that we face in reality. The first one is the fixed cost. The fixed cost, when we talk about the fixed cost, is the cost that is not associating with the number of production, in a meaning that you are going to pay for rent of the land that you are having your manufacturing, or you have your factory, I mean, regardless of the number of production. The utilities that for the facility, you are going to pay it regardless of the number of production, if you increase it or decrease it. The minimum labor cost, which means الحد الأدنى للأجور, you are going to pay it regardless of the number of the production. So these fixed costs and whatever applied to cost that is not going to be affected by the number of production, we call it a fixed cost. And those only just an examples, and they are not the only fixed cost. Depend on your case and depend on the business case. So the fixed cost is the cost that is not depending on the level of goods or service. When it says goods, means product, and services means the transaction services. Insurance for the facility, also one of the examples that for a fixed cost. The second type of cost, which is the variable cost, which is on contrary, that is the cost is going to be depending on the number of production, or it is going to be based on the number of production. An example is the material. The material, you are going to consume more material if you are considering the variable cost. I mean, if you are considering increasing the production, so the variable cost will be a material. Labor cost, now when we talk about the minimum, that is the minimum in the fixed cost because it was going to be paid anyway. But the labor cost is something that is above than the minimum, and it's going to really depend on how many people you are hiring at each level in the organization. The advertisement, definitely you are going to use it as a variable cost because it is going to be based on how many products you are selling or consuming. Warranty, it is one of the examples. And can someone tell us what is the difference between the warranty and the insurance? And why is the warranty is variable and why is the insurance is fixed? Why is the warranty considered to be a variable cost, whereas the insurance is a fixed cost? Should I pick randomly from the class? Okay. Hazim, why is the warranty considered to be a variable and why insurance is a fixed? Okay, so to clarify the difference between them, the warranty that you are going to have it based on the number of quantity of your products. If you think about phone, when you go and purchase the phone, you have a warranty for that item itself for 1 or 2 years, or depending on the number of years they gave you. The insurance, on the other hand, it is on the facility as a provider for that product. You pay it on the facility, you pay it on your factory, and so on. So it is something that fixed. It is not going to be affected by the number of production, but the warranty, as much you are going to produce, as much you are going to spend on warranty for those items. So that's why we have the warranty on the variable and insurance on the fixed cost. Moving on, how to find the cost. Basically, you add the total, which is the variable and the fixed, together to get the total cost. The fixed cost, or usually as you see in the equation, FC means fixed cost, VC, which is the variable, and the fixed cost, since is not affected by the quantity, that's why we see it's a single value, but the variable cost, it is multiplied with Q, which is quantity. So the variable cost per quantity multiplied with the number of quantity to get the total variable cost. When you add it to the total fixed, you get the total of the cost. The revenue equal the revenue per unit multiplied with the quantity as the variable cost, because the revenue, you are going to measure it based on the number of sold items or services or transaction of that services. So to find whether you are having a profit or a loss at the end of the year, you subtract the revenue minus the total cost to get the R, which is the revenue, minus the total cost, equal the RQ, which is the revenue multiplied with quantity, minus fixed cost plus the variable cost. Now, what is the difference between the revenue and profit? The profit is when you consider the cost and the income, which is the revenue. But the revenue itself, it doesn't mean that you are having a profit at the end of the year or at the end balance time. Because you may have revenue, but when you consider the total cost you are spending to generate that revenue, you may face that the cost is greater than the revenue, so you end up with having a loss. But if your revenue is greater than the cost, then you will have profit. And at the break-even point, the revenue and the total cost, they need to be equal to each other. And to find the quantity at the break-even, which we name it QBE, it is equal to the fixed cost over the revenue minus the variable cost. And that is the equilibrium point, and that is the number of quantity where is the revenue equal to the cost. If you increase the quantity from the quantity of the break-even, that means you are going to generate more revenue, and that means you are having a profit. But if you are producing less than the quantity of the break-even, that means you are having a loss, and that means also your revenue is not achieving the cost or not match to your cost. Who's asking chapter 11? It is already recorded on the Monday, and it is posted on both the channel and the Blackboard. So you can watch the second part of chapter 11 over there, and then we can discuss it for any question before any exam is coming. So here is the condition about the quantity of break-even and the quantity that you are planning or you are producing. If the quantity break-even, which is found from the formula previously shown here, fixed cost over the revenue minus the variable cost, if the quantity is greater than that quantity of the break-even, that means there is a profit. If it is less than the break-even, there is a loss. If it is equal, that means there is no profit, no loss. It is the break-even point as itself. Okay. Let's take an example, a small example to make things clear. Water vending machine. جهاز vending machine for water. The fixed cost is $900 per month. And the revenue, which is R, it is 30 cents per gallon. The variable cost is 18 cents per gallon. What is the break-even quantity? The quantity of the break-even, which is QBE, Q break-even, equal the fixed cost, which is the 900, over the revenue, which is the 30 cent, minus the variable cost, which is 18 cent, and that's equal 7,500. So the quantity of the break-even, where is the cost and the revenue equal to each other for this vending machine, is to sell 7,500 bottle of water per month. And if you are selling more than the 7,500, that's mean you are having profit. If you are selling less than the 7,500, even if it's 7,499 bottle, that's mean you are having a loss, not a profit. If you are just selling that 7,500, that's mean your cost equal to your revenue. And pay attention to the 30 cent, that is like 30 halala, so it has to be written as, you can see, 30 hundredths or 18 hundredths اللي هو 18 من 100 و30 من 100. Okay, moving to another examples of the break-even point for a single project. A plant produce 15,000 units per month. 15,000 units per month. Find the break-even level if the fixed cost is 75,000 per month, the revenue is $8 per month, and variable cost is 2.5 per unit. Sorry, the revenue is $8 per unit, and the variable cost is 2.5 per unit. Find the expected monthly profit or loss. So two things are needed. Find the break-even level. When it says the break level, that's mean quantity of break-even. When it says the expected monthly profit or loss, that mean you have to apply the formula that we have covered earlier about the profit, which is here on this slide. When you see the profit, how it is calculated. So going back, the fixed cost, it is 75,000, and the variable cost is 2.5, and the revenue is 8. When we apply the quantity of the break-even, we divide the fixed cost over the revenue minus the variable cost, and then that will lead us to 13,636 units per month. What does that mean? The current production level is 15,000, and the break-even is 13,636. Without calculating the profit or the cost, we can tell there is a profit. Why? Because the quantity that is the actual production is greater than the quantity of the break-even. And in that case, that means you are having a profit. But how much is that profit? You go to the formula that in the earlier slide to find the profit from the fixed cost, variable cost, and the revenue. And when you go to the breakdown, the formula, it will be the RQ, which is the revenue multiplied with the quantity, minus the fixed cost plus the variable cost multiplied with the quantity, which that leads to R minus V when we take the associate factor. multiplied with the Q, the quantity, minus the fixed cost. To apply that formula, the revenue is 8, the variable cost is 2.5, the quantity is the current production level. Don't confuse, this is a quantity, not a quantity of break even. So Q is the current given quantity, okay, which is the 15,000 minus 75,000, which is the fixed cost. That will give us 7,500. So this is a profit, أرباح. Even when we consider the cost, this is considering that your cost and your revenue at the end you will have per month 7,500 as a profit if you are going to produce 15,000 unit per month with all these given information. Any questions so far before we move on? So I assume everything is clear. So moving on to another example also for a single project break even. Usually for typical chapters in the engineering economy, we handle the single project and multiple projects in terms of the comparison or in terms of the analysis. In this example, a company that has an average fixed cost which is $900. Each gallon, when it says each gallon, cost, that's mean a variable, because this a cost, it is based on the quantity. It's not something that is fixed. When it says each gallon, it is the unit of the production or the unit of the good level. That's mean it is a variable. To purify تحلية المياه sells for 30 cents. When it says sells, that's mean you are selling that by 30 cents. And that is the, in terms of the concept of cost or revenue, it is revenue. Why? Because you are selling this by 30 cents. So this is going to be inflow, so it is revenue. Determine the monthly sales volume needed to break even. So find the monthly sales volume need to break even. This question basically to find the break even point. So the fixed cost is given, the variable cost is given, the revenue, we just apply the formula to find the break even point, which is the quantity of the break even. 900 over the 30 cent minus 18 give us 7,500 gallons per month. So that's the break even quantity. Okay, in part B, there is a little trick here. In part B, it says we can skip all that and we start with this, what is the information needed to reflect it on the variables. The fixed cost and purification cost will be the same. So the fixed cost and the variable cost, which is the purification cost, because it is based on purification, تنقية المياه. So you pay, this cost is based on how much you are purifying. So it's variable cost, which was the 18 cent. So the 900 and the 18 cent, they will be the same. But the sales price, سعر البيع, which means the revenue per gallon will be 30 cents for only the first 5,000 gallons and 20 cents for all above that threshold, which is above the 5,000. Determine the break-even volume at each site needed to break even. So in this question, the only thing that is new and it is different about the revenue. The revenue here, it was given in a two states or two phases. the first phase, which is the 30 as it was, but it is only for those 5,000 gallons. But then if you are exceeding that number of gallons, you are going to sell it for 20 cents. We don't know what is the threshold level that is addition to the 5,000. So when we formulate this question, first we need to formulate the revenue equal to the cost, because from there we can find the break-even point. When we formulate the revenue and the total cost, we end up with this equation which we all familiar with, which is the quantity break-even equal the fixed cost over the revenue minus the variable cost. And when we use the quantity of the break-even, the QU, we are going to use it as identification for those quantity above the threshold or above the 5,000. Okay, so the QU, we are going to use it as a representation for the quantity that is above the threshold or the 5,000 or above the 5,000. Okay, so the fixed cost, which is, let's go back to the formula here. What is the given was 18 cents for the variable cost, and the sales cost or the revenue is 30 cents. Okay, so the 30 cents multiplied with the 5,000 as a revenue for the first 5,000, but then the revenue will be 20 cents, not 30 cents, if we are exceeding the 5,000. So we agreed the quantity that is going to be above the 5,000, we will refer to it as a QU. So the QU is representing the quantity over the 5,000 multiplied with the 20 cent. One unknown first degree equation, معادلة من الدرجة الأولى لمجهول واحد. Okay, equal to the fixed cost, nothing to be changed. The variable cost definitely is going to be changed, not change in terms of the value, but in terms of the implementation. We used to know the number of quantity. In this case, we know only that there is two parts of the quantity. The first part, which is the 5,000, and then a quantity that we don't know if it is exceeded the 5,000, and we refer to that as a QU. So we added the QU and the 5,000 together, multiplied with the same exact 18 cents, because the 18 cent is not changed when we increase the variable, when we increase the quantity over the 5,000. Only the revenue that is changed. That's why we split those two parts, but here we combine them, the 5,000 plus the quantity above the threshold. Now we solve this equation for the unknown QU until we get the QU, which is the 15,000. And to find 15,000, basically you add it to the 5,000, which is the production that is expected or being determined based on the given information, to get the 20,000, which is the quantity of the break even. So at the break even point, the revenue and total cost will be equal to 4,500. How we know that? You can just apply the quantity of the break even, the quantity of the given QU to the revenue and cost to find the revenue or the cost. So at this point, we can find the revenue or the cost or the total cost by having one of those as an unknown and solve the equation for the quantity of the QU. And if you want to find the cost for the break-even quantity, you can solve it for the 20,000, and solving it for the cost or the revenue, it will give you the same, because at that point the cost and the revenue will be the same. But if you want to find the revenue and or the total cost for the QU that is above than the 5,000, you apply the equation to the 15,000 instead of the 20,000. I'm going to stop for here today, because the second part, it will be the two alternatives and finding the break even for the two alternatives. We will inshallah continue with that in the next week. But before we end up the session, if you have any questions regarding to the break even for a single project, we can answer it now. If you have any questions, please raise your question in the chat box or raise your hand to have your questions on the mic. No questions? Okay, so we close this session and then stop the recording.